Welcome to MRC University, a mission roll call series created to empower veterans, military families, and caregivers with the knowledge they need to lead confident, purpose-driven lives after service. In this special financial literacy series, we're honored to partner with Seth Wheeler, a certified financial planner, seasoned wealth management advisor, and a trusted guide to thousands navigating the complex world of personal finance. Whether you're preparing to get out of the military or have been out for years, this series is for you. Seth brings decades of experience serving service members and veterans, making smart financial decisions. No jargon, no judgment, just good, honest advice tailored to your life and your goals. So grab a notebook, invite a battle buddy, and get ready to get all your financial questions answered.
Welcome to the series for Mission Roll Call. Valerie, appreciate the introductions. I'm Seth Wheeler, and I'm truly passionate to be here with you today. One of my superpowers is being able to talk without breathing, so I apologize if in some areas I go a little bit fast. However, this is also recorded, so if I say something a little bit too quick, you can always go back and take a look at the content. Today is very specifically financial education. Okay, and there's a big difference between financial education and financial advice. Compliantly, we can't give financial advice unless it's specific to someone's personal circumstances. And that's a compliance requirement. So I need to highlight today that we are covering education and concepts that may or may not apply to you or those in your network, but give you at least a starting point and a foundation of knowledge with which to make informed financial decisions or seek further financial expertise and advice relevant to your particular current situation and potentially your future. Let's cover insurance. So insurance, at its face value, what is insurance? Insurance, whether it's your car insurance or your auto insurance, is designed to protect the rest of your assets against catastrophic outcomes. So, for example, the reason that the laws say that we have to have car insurance is because most of us don't have tens of thousands of dollars sitting in our bank account that if we accidentally hit someone, we're able to cover all of those expenses for ourselves and for others. And it got to a point where so few people had the financial resources to do that. States passed laws that said you must be insured. However, is when it affects ourselves versus other people, laws don't necessarily apply to that because we're allowed to treat ourselves and or our families as we wish. We're allowed the discretion with which to make those decisions. It's only typically when we affect other people that the states will pass laws mandating that you have car insurance to protect others' interests. So let's just talk about life insurance real quick. What is the purpose of life insurance? What are the designs about thinking about life insurance? What are the concepts that are potentially important to you as military service members or transitioning service members to the private sector? Overall, there's really two types of insurance, generally speaking. There's term insurance. Term insurance is like renting a home, meaning we're filling a financial gap. You've got a need, you've got a financial value, a need for income if you are no longer with your family. So let's just say that you make $10,000 per month. I wish all of us did. And one were to pass away. Well, those in your family, and including your potential distant family members who might have to pay burial expenses, are going to need some amount of finances with which to take care of your estate and or take care of your remaining family who are used to having your $10,000 a month income. So life insurance is designed to fill that gap, to fill the financial gap of not having lots of money in savings and investments to cover the gap that you have now created in your absence for having a monthly paycheck earned income. Term insurance is designed for a term. That's why it's called term insurance. It's for a period of time. It's like renting a home. It's for a given amount. X amount doesn't increase. If you apply for, say, $10,000 of life insurance, it's going to say $10,000 for many years. And that's important because we'll talk about how that changes over time. $10,000 today, when we look at inflation impacts on those dollars and the inflationary impact, the value actually declines over years and certainly as we look at decades in the future. Just like renting a home, it's what you get. You can't put in a new kitchen. You can't put in a new garage if you want to. No extensions. You might be able to paint a little bit and choose the colors ahead of time. But for the duration of that term, what you see is what you get. Because of that, there are no penalties for canceling or reducing insurance in the future. In fact, in some cases, the insurance company would prefer that you do that because you've given them premiums. You've covered a gap for a period of time. And if it doesn't make sense to have those policies anymore, and we'll talk about some of the circumstances on why that might be the case, then you can simply tell the landlord, I'm done with my lease, I'm moving out, and you can simply move on. Term insurance compared to permanent insurance is designed for other purposes, right? It's something that one would own for the entirety of their lives. That's important because insurance is the most discriminatory product on the market. They've got enough actuarial data, enough demographic data to prove that they can give different people different insurance rates or declines based on how old they are, what their gender is, how much money they make, how many assets they own. And so because they can prove this to local, state, and federal governments, they are then allowed to design different contracts, different insurance contracts for folks. So term insurance can be designed for folks who have a planning need and a planning gap, but the cost of that insurance will really depend on, number one, their health, using health as a financial asset. If you're healthy, you're likely to get a better offer for what the cost of the insurance is going to be. And age plays a role because, of course, as we're aging into our later years, we're more likely to pass away. So we need to think about insurance as a business construct where the insurance company is there to make money as a business, but also then give a good product offering to fill your financial gap for a period of time. That's important because when we look at permanent insurance growing into the future, the insurance company knows that they're at some point, as long as you pay your premiums, going to have to pay out the death benefit. So term insurance is a little bit different where it's for a term period, whereas permanent insurance, the insurance company views that as an entirely different product. They're hoping that you live a long time so that you can pay many months and many years of premiums, knowing that eventually they're going to have to pay out. That's important because of that known payout. Permanent insurance can often be more expensive, more cash flow intensive on a monthly basis because of that reason, because of the fact that they're going to have to pay out. Now, there's various types of permanent insurance that's like buying a home. They can be very customized, right? Unlike renting a home where what you see is what you get with term insurance. Permanent insurance, you can put a kitchen in, you can design a new driveway, you can even do landscaping. So there's a lot of different options for permanent insurance. Some of them have, in addition to the death benefit, of course, what's obvious, the reason we get life insurance, but some of them have living benefits where when we look at the Internal Revenue Code, in the advanced planning space where we work, we look at the Internal Revenue Code specific to life insurance. And there are some provisions in there that say, well, you have a life insurance policy, but under the permanent side of things, we're going to allow you to have some additional benefits like growing cash value inside of it, which simply means that if you put money into a policy based on the terms of the contract, then money can remain wrapped inside that life insurance wrapper underneath the Internal Revenue Code. And there are some tax advantages with that. So when we look at the idea of how much insurance do I need or what makes sense, really there's three reasons that we want to have insurance. And the acronym is D.I.E, not to be macabre about it, but it's debt. The first one is debt. The second one is income or survivorship. The last one are what we call expenses, and it's sort of a catch-all category. So we have debts, we have income or survivorship for our loved ones, and then other expenses. So running through that process of how much debt do I need to pay off, what my survivorship income needs are, any remaining expenses that I want to leave for family members or beneficiaries, or in some cases, charities, and then subtracting our liquid net worth, what's available to us. We typically don't use property because it's not liquid. You don't really have access to it. You can't spend property. You end up with an analysis of what might make sense for the average family. Again, these are concepts only. One really has to either do the analysis in detail or work with someone who's licensed and able to run these numbers.